Hello everyone, welcome to today's edition of The Final Bar. Joining me today is Grayson Roze, going to share with us the Cyber Monday sale on StockCharts.com. We're going to recap today's market activity, a bit of distribution today. We'll see how that relates to last week's action. Also, a mystery chart that you will not want to miss. Also share with you one of my favorite chart lists. Ladies and gentlemen, this is The Final Bar. Hello everyone, welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. I want to thank you guys so much for joining us here today in our studio. Quite the distribution today in the market, so we're going to be looking at all the charts, looking at the S&P getting back below 3120. We'll see how that relates to last week's rally during the holiday week, shortened week, and think about what this means going into year-end. A lot happening, but most importantly today, Cyber Monday. And to talk about that, I have my friend Grayson Roze from the management team here at StockCharts. Welcome to the show, my friend.
Thank you. Good to be here.
I have asked you many, many times to come on the show. Thank you for, again, for doing it.
And on camera, too.
On camera.
Fun. Yeah.
Congrats. Cyber Monday is a big deal for StockCharts.com and our members. What can you tell us about it? What should we know?
Cyber Monday is a big deal. We got a crazy day in the markets, and we got a crazy day on StockCharts. It's a special one. Annual Cyber Monday special, but this is not the normal Cyber Monday special. This is our biggest sale ever, which is crazy. So I had a funny conversation with Chip a couple weeks ago when we were planning the whole Cyber Monday thing. He came into the room, he said, I know what we're going to do. We're going to give people a year of free stock charts. And I said, no, you're not. Get out of the planning meeting. We're not doing that. And here we are, a couple weeks later, we are giving people a year of free stock charts.
Right.
So what we are doing right now is if you sign up or renew for a long-term subscription, whether it's 6, 12, or 36 months, we're going to go ahead and give you 2, 4, or even 12 months of stock charts for free on top of that. So you come in for a long-term subscription, you sort of lock in this discounted rate. We're going to give you extra time on the back end on top of that. So it works out to about a 33% discount. It really is, I can't stress this enough, the best day of the entire year to sign up for a StockCharts account. It is hands down the best day of the entire year. To be a member, or if you're thinking about signing up, you're not currently a member and you want to become a member, this is the best day of the year to sign up. Best pricing, hands down.
Right, so and even for people renewing their membership, people that have been members for a while, still a great time to lock it in, right?
Yeah, whether you are a member, you can renew, you can extend your subscription. So let's say you've been with us for a couple of years, you love what you do here on the site, your chart lists and scans and all that stuff. You can extend your membership out and take advantage of this special pricing. We're going to add that free time on the end of your subscription. Or if you're free, you've been thinking about signing up, maybe you've been thinking about taking our free trial. This is a great time to sign up, sort of lock in that discounted rate. And be with us for a while.
So as you probably know, this is Crypto Week on StockCharts.com, and it brings to mind all the things that we've been working to add or that are going to be adding going into the new year on the product. I mean, I feel like the product keeps improving.
Always.
What kind of things are going on? What should we know about, and what's the reason why we should be?
So we're really excited about this Cyber Monday special because 2020 is guaranteed to be a huge year for us. So as a lot of people know, we have our advanced charting platform, StockCharts ACP, coming out. That's going to be hitting in the spring. We're going to be launching the full version 1. But the beta release is out right now. So people have been having a really good time playing around with that, seeing what we're working on. And it really is kind of the next generation of StockCharts technology, a lot more interactive, a really kind of dynamic view of the market. So that's coming in 2020, and we are thrilled about it. But we've also got huge things happening on StockCharts TV, great new content, which makes the whole platform even more powerful. We're going to be doing a lot more with chart lists, chart list reports. We've got some exciting things coming in the next few weeks. That was a little hint for you guys. Crypto data has come to the site. We've got more data coming in the next 2 months. We've got a whole new package of data, which I'm very, very excited about. Dave is very excited about as well. So just a ton of stuff coming in the next couple months. It's it's going to be fantastic. We're really excited about 2020.
What's great about a lot of the things that you talked about, I know that a lot of it has come from customer feedback. People asking for cryptos, and so we've now added them. People asking for fundamental data and ways to get into their chart list with different things. So what's cool about what you and I are working on is pretty much everything we're talking about has come from customers asking for it, which is really, really cool. So again, those of you that have been thinking about it, certainly seems to be the time to lock
and
things in.
From our perspective, obviously members get access to more than anyone else, but they also get first access to everything that we do. We love to preview things for our members and do special things for the people that are with us on a full subscription. So again, if you're not currently a member, this is the best time of year to sign up, the best day. Go try out a 6-month subscription, see all the crazy cool things we're working on for you, and you can really take advantage of this special time. So. Or if you're a member, we tremendously appreciate your business. We are so happy to have you, and we really are looking forward to some major things coming in 2020. So we're excited for you to lock in this discounted rate here today and be around for the excitement.
Good stuff. So good news with Cyber Monday. Encourage everyone to check it out on the website if you've not already. Grayson, thanks for coming on today. And you, in front of everyone, all witnesses, you will come back on to unleash some of these new features on the site next year.
Definitely don't miss it. We've got a lot of things up around the site. StockCharts.com/special is the page that you can go to see everything. But we got banners and the homepage and everything has been changed, so you should see it.
Good stuff. Grayson, thanks again for coming on. Appreciate it, my friend. Let's get to the markets, folks. This has been a crazy distribution day. We talked about last week about all the volatility, the rally into the holiday, and then all of a sudden we start to get a little bit of distribution, shortened days, lighter volume days. So, it's hard to draw a lot of, dramatic conclusions based on the shortened activity. However, today we have a full day, and this is where I think the flavor of what's coming sort of starts to manifest. So the fact that we have a big distribution coming out of the weekend, coming out of the holiday, I think should hopefully be, just a nice warning, a nice way to remember the fact that, that there can be plenty of upside and downside volatility. Now, what I would encourage you to remember, looking at a chart of the S&P 500, just today, never, hopefully, if you've learned anything from this show, don't draw too much of a conclusion from one day's trading, but you do want to look at the trading over multiple days, over multiple periods, multiple weeks. That's how trends emerge. So one day is not a trend. One day is how you start to fill out the trend. So even with the pullback today, we still have a pattern of higher highs and higher lows. So by Charles Dow's very simplistic definition, the trend is still positive, so let's not be too worried. However, when the market sells off like this, it's a really natural time to look down and see where are the lines in the sand, what are the levels at which you might start to be concerned. On the S&P, the cash index, 3090, that's the most recent swing low. Below there, around 3080, 3075. Those are the last two lows that we've had from last week and the week before that, the last 3 weeks. Those are the key levels. So at this point, as long as the S&P remains above 3090, that tells you overall the trend is still fairly positive, right? If we would start to break through there, if we would get a confirmed breakdown, then you need to start to think about further downside targets, about what sort of consolidations we might see. So far, this might just be the beginning, might just be an initial pullback. So that is the key level to be paying attention to. S&P 3090 is the level I'd be looking at. I'd encourage you all to pay attention to that. Looking at just today's trading, you can see how the real sell-off came in the first hour and a half of trading, going 9:30 to 11 Eastern times, when we really had the distribution. A little bit of a rally, but back in the last hour, and we've talked a lot about how that last 30 to 60 minutes tells you a lot about what institutions are likely doing. You see that was certainly back to more distribution. So the initial sell-off in the morning, you had another sell-off leading into the close. So overall, certainly more distributive. So on a day like today, it has happened. Tomorrow, Wednesday, is when you start to see what sort of follow-through we have and see how that relates to things. Let's look at the member dashboard to start to get our heads around what all has happened here. So looking at the market overview, we have the S&P down almost 1%, 86 basis points or 0.86%. The Dow down a little bit more, almost 1%. And the Nasdaq, the tech-heavy Nasdaq, down even further, over 1%. Looking at large, mid, small, that's one of the traditional things we've paid attention to. We have large caps down 0.8%, mid caps down a little less, 0.7%, but small caps really down the most. So again, if we're in a traditional risk-on environment, you'd want to see small caps leading the way higher. Certainly has not happened today, with more of a consolidation, more of a distribution. Looking at the bond markets, we had yields up a little bit as bonds sold off today. The TLT down 1.5%. That pushes the 10-year yield up to about 1.83, 1.84%, up 60 basis points from Friday. Commodities flat for the day, right? So even though you had this distribution on equities, you did not have a huge flight to safety in the form of gold. And again, I would remind everyone, it's really easy when you see stocks doing one thing to make an initial assumption about what something like gold would do. Okay, stocks are down, that means gold's probably up. Remember, these are not happening in a vacuum. If nothing else was happening, you could see that. If you had one choice, own spiders or own gold, I could see a sell-off in spiders being, related to a strong increase in gold, but that's not happening, right? There are a lot of different things happening. It is a complex system we're looking at, not a simple system. So gold actually flat for today, but certainly not down. Copper down, just a rounding error of sorts. Oil up a little bit, so oil and natural gas up. So in energy, you had some positive movements that helped the energy sector, looking to the right, be flat for the day. Ended pretty much where it closed on Friday. Consumer staples was the only of the 11 S&P sectors up today. Everything else down after consumer staples and energy. At the very bottom, you had real estate, industrials, and technology. So, what concerns me about this, or one thing, not necessarily a concern, maybe just an observation, is remember on a big, a down day when you'd expect something like real estate, something like utilities to be at the top of the list, both of those sectors actually sold off today. So it's a good reminder on a day like today, don't think too much about the market does X, which means all these sectors and all these groups and all these stocks should probably do Y, Z, and so forth. Those are all guesses, right? Those are educated guesses, but in the end, look at the data. So today, a down day in the markets, but real estate was actually leading the way lower, down 1.76%. So a lot of really interesting moves, clearly more distribution over accumulation. This is crypto week, so I'm going to try to pepper in some crypto ideas, some crypto thoughts, and how it relates to everything else that we talk about. And again, I think for a lot of us, watching the show, listening to this broadcast on YouTube, we're not primarily crypto traders, and that's totally fine. But I had a conversation with Tom Lee at Fundstrat, a couple weeks ago down at the Las Vegas Traders Expo, and we talked about cryptocurrencies, digital assets, and how they are so different in terms of their return profile and so forth from all the other assets. So from an asset allocation perspective, it could be an interesting way to diversify into other things. And so adding crypto data to the platform is a way to help understand those relationships. So today, with the S&P down, Bitcoin, Ethereum, all the major cryptocurrencies down pretty significantly as well. Now remember, if you're not used to looking at cryptocurrencies, the volatility is definitely exaggerated relative to other places you've seen it. So just be aware of that. But certainly we've seen more distribution than accumulation essentially across the board. Very limited pockets of the market that are up in a meaningful way, but we'll keep looking at it going forward. So that's our recap for today's trading here on Monday, December 2nd. Our next segment is our popular mystery chart segment. What we like to do with this is introduce a chart, show it to you, have you guess what it is, and then later in the show we're going to reveal what the mystery chart is and talk about why it's important. And again, I don't pick these randomly. These are all things I think that are important to pay attention to, and in the unveiling later, we'll talk about what this specific security is and why it should be on your radar. So the question to all of you, Team Final Bar, what is this mystery chart that I'm showing you on the screen? General ways that you can understand or make it a good guess is what the trend is. So this is a security that started rallying really before the market low last December, sort of steady in the first quarter when stocks were rallying, but really accelerated into the summer months. Since then, it's been a slow and steady distribution, now below the 50 and 200-day moving averages, the 200-day flat, the 50-day going lower, and we have a pattern of lower highs and lower lows. The RSI was recently oversold, back up, didn't even make the 50 level. So what is this security? What is this item that I'm showing you? We'll unveil it later in the show. If you have any guesses, put it on the chat room on the StockCharts TV screen. We're going to take a brief commercial break, and we'll be back with one of my favorite chart lists that you're not going to want to miss. We'll see you in 1 minute. Hello, everyone. Welcome back to the show. I'm Dave Keller, your host here at StockCharts.com, Chief Market Strategist. Thanks for joining us on the Final Bar every day, 4 o'clock Eastern, so we recap the technical activity in the market, help you connect it to the long-term trends. Grayson was my guest earlier, Grayson Roze, earlier today in the show. Do not miss the Cyber Monday sale. Those of you that are StockCharts members or have ever considered doing it, today is the day. It's never going to get better than what you're seeing today. So if you've not seen it, go to the StockCharts website. You'll see it across the top on a banner, or go to StockCharts.com/special. You can see all the details, lock in a good rate for the coming months and years. So check it out if you haven't already for today on Cyber Monday. One of the segments that I've really enjoyed doing is called Today's Chart List, and what I talked to the producers about was sort of highlighting some of the ways that I'm using StockCharts.com, some of the chart lists that I refer to regularly, just to help you think about ways that you can use the platform a little better, ways that you can think about the chart list system, which I would argue is one of the better parts of StockCharts.com. So on your dashboard page, your member dashboard, it's going to look something like this, a little different because we can configure ours different ways. But if you click on the chart list button, this is going to give you the list of all the chart lists. And again, as a reminder, the Arthur Hill trick, which I think is genius, is numbering each of these chart lists in order. That allows you to very quickly resort them if you want to put things in a different place. But the one I want to go to is in my section called Broad Market Chart Lists. This is where I like to look at global ETFs. This is where I like to look at some trend models I've developed. This is where I like to look at intermarket analysis, all the stocks in the S&P 500 or S&P 100, even just the members of the Dow, to break down what they're doing. So this is a great part of my regular review process. The one I want to focus on in particular is this one right here called U.S. Equity Market Indexes. Now, this is one that I've sort of tweaked over time, and I tend to look at this in a candle glance format, So depending on what type of chart list you have, it could be interesting to look at the list in different ways. Some of the lists I like to look at just in terms of percent returns, like the ETF list comes to mind, where you just want to know which countries are up and down over on a certain trading day. For this one, I like to look at it in terms of the candle glance, because visually I'm all about comparing these different main equity indexes in the US to see what sort of patterns I see and how they relate to one another. So in general, the way that I highlight my chart list is starting with real broad stuff at the top. So I'm starting with the most commonly referred to indexes right across the top: the S&P 500, the Nasdaq Composite, the NYSE Composite, which is one of the broader indexes that I'm tracking here, the Dow Jones Industrial Average, and the Dow Transports. And those last two are pretty key because that's Dow Theory, right? Looking at the Dow Industrials and the Dow Transports. So very quickly, I can always glance at this point, seeing that the Dow Industrials have seen a pattern of higher highs and higher lows, while the Dow Transports has actually started to make the opposite, lower lows and a potentially lower high here that I think we've started to confirm. So seeing a new lower low would really confirm that there's a difference in trend, a real difference in trend between the Dow Industrials and the Dow Transports. I'm then starting to look through the utilities, the Nasdaq 100, and then I'm getting into market cap. So I'm looking at the Russell 100, Russell 1000, Russell 2000, and the Russell 3000. This is using ETFs because they're incredibly liquid, and I found a lot of people will pull the trigger just on the ETF, the IWB or the IWM. So I like to look at as much as you can look at what you're executing on. I think that's pretty powerful. But I like to look at the S&P indexes as well. So I have the S&P 100, the mid cap, and the small cap. That's one of the main ways that I like to look at large, mid, and small and see what sort of relationships we have. I'm then getting into micro cap, which is something that is off a lot of people's radar. And I tell you, that's totally fine until it emerges as one of the better places to be. And then you will thank me for having the micro cap ETF on your plate. So if you don't have the IWC on there, it's really good to get it into your list of ETF charts, because then you'll make sure that you incorporate, you see the visual representation of what microcaps are doing relative to these other tiers. We're then getting into the Wilshire 5000, which is the broadest index I'm looking at. The Value Line Arithmetic Index, this is more of an equal weighted index. And so a lot of times when you're looking at the S&P 500, that's 500 stocks weighted very heavily to the largest companies. So things like Amazon, ExxonMobil, Walmart, these stocks, Microsoft, Intel, Apple, these have huge weightings on the index itself. So if one of those stocks has a really bad day, the whole index is going to have a move related to that. But looking at the Value Line Arithmetic Index, you're sort of taking the weight of those huge companies a little bit off the table, and you're looking at more a broader measure. Another way to think of it is, what is the average stock doing in the U.S. equity markets? And that's a great way to sort of look at it. And at this point, continues to break to new highs, which tells you why overall, fairly constructive pattern. The Dow Composite, very similar. It's a very broad index. Then I'm starting to get into some charts which the candle glance does not really do it justice. So we're going to go through the last couple of these individually. So this next one is the Dow Industrials versus the Dow Transports. This is Dow Theory. So here I'm seeing the higher highs in the Dow Industrials, the lower highs in the Dow Transports. That is a potential area of concern on a closing basis, which is how Charles Dow really created these initially, was based on closing prices. The Industrials now with today's sell-off has pulled back right back to its previous low. If we would have a lower low there and a lower low in the Transports, which we've not quite gotten, that would start to be a short-term breakdown in both of those broad indexes. We're going to come back to the new Dow Theory a little later. I then want to show you some cap tiers. So now I'm looking at the large, mid, small, and micro all in one place. And as I told you earlier, if microcaps IWC aren't on your list, I found a lot of times people get really focused on a routine and then they never take the time to improve it or to tweak it. So you might be really familiar looking at large, mid, and small caps. That's totally fine. But microcaps are something you are probably not looking at that you should, only because the return profile can be a little different. There are going to be times, especially in a really speculative period, when microcaps might hold up a lot better or might rally and start to outperform. You're just going to want to be aware of when that happens. The last one I like to do, just to break it down again, this is just showing you the power of the StockCharts system and the Sharp Charts platform we're using here. I then look at those same four, but I like to break them apart into four separate segments, and it allows me to really look visually. At this point, I would argue they're all in agreement, large, mid, small, micro, all in a pretty consistent pattern. If we start to see them breaking down on a closing basis, then we may want to be concerned. So that is my chart list. Today's chart list, which is looking at the U.S. equity market indexes, and I would not just look at the S&P. Make sure you're looking at other slices of the equity indexes in the U.S. That's a great way to get an overall view of what's happening. For our next segment, we have the mystery chart. Can you guess what it is? I'll show it again here on the screen. The mystery chart is a security. It is something that is, boy, it's hard to give a lot of hints without completely getting it off. So let's see what we have giving up. Let's see what we have in the guesses. Bitcoin, fantastic guess. Team Final Bar, well done. It is in fact the Bitcoin index, and if you're not familiar with that, it's $BTC USD. Again, I've mentioned it's Crypto Week here, and so what we want to do over the course of this week is just highlight some of the ways that you can incorporate some of the cryptocurrency data into your thinking as you're looking at different assets and how they're related. The reason why this is an interesting chart, number one, just to remind you, the fact that you can get access to some of these markets, and again, if you're not familiar with it, go to your member dashboard. At the top of the market overview, we have equities, bonds, commodities, and then crypto. This is a great way to find, and all the tickers are here listed above the little preview chart. You can then enter those tickers into any of the different charts that you might be looking at. So what is important about the chart of Bitcoin? I mentioned it in the teaser earlier in the show. Bitcoin, and I don't have the relative performance. We're going to talk about that in a moment, but I would show you that there's been a clear period of uptrend, a clear uptrending period. After sort of March, April period, we really start to accelerate, go to the upside. As the market really sold off, the equity markets I'm talking about, Bitcoin actually held up pretty well. Now, granted, these are huge percent swings. So this is going from 9,000 up to 14,000 or so over a couple months. So remember, this is a very volatile asset, and you certainly want to be familiar with that. But as much as people talk about whether or not Bitcoin is doing well, whether it's going to 1 million or going to 0, again, always take a step back, in my opinion, look at the chart, look at the trend, and have that be the starting point of your analysis. So what has the trend been for the last 4 to 5 months? I would argue it's been undeniably lower. We have a period of lower lows. We have a period of lower highs, meaning every time the Bitcoin goes lower relative to the dollar, it pushes to further lows. Every time it rallies, it hasn't gotten above its previous high. Most recently got down almost to 6,500, a rally almost to the 8,000 level, but that's well below the high that we had last month. So overall, we have most recently established a lower high. We are now working on a future lower low. So until that pattern changes, the trend is certainly lower. RSI is an interesting thing to look at, especially when you're trying to get your head around the relative movements, because this is all momentum relative to how Bitcoin normally trades. Look at what the RSI did back here in April, May, June as it continued to push higher, extremely overbought. Look at how different the RSI is now, going oversold and rarely getting back above that 60 level. So on any rally, you're looking to see if the RSI remains sort of below 60. I did want to share with you one further chart, or maybe two charts here. This is a chart I like to look at all the time. This is since the equity market low end of last year. We have the S&P 500 in black. It's been the strongest performer, up almost 35% over that period. Next, we have in brown oil. We have the TLT, so this is bonds, this is gold, and then we have the dollar up about 5%. The UUP we're using here is the dollar index. So overall, that's sort of the relative performance. You can see there's sort of uptrends and downtrends, but look what happens when we add Bitcoin, and you can see how exaggerated these percent returns are. So Bitcoin in that April, May, June period really accelerated, and at its peak, it was up over 215% relative to the S&P. It then has come down, still up almost 80% relative, or on an absolute basis. That's compared to the S&P that's up, about 35%. So the relative moves are there. But again, start with the trend, look at the visualization, and make sure you understand where these assets are trending relative to one another. So that's a really good way to use the performance charting capabilities to illustrate some of cryptos relative to other assets. To wrap up today's show, however, we're going to go right to the 3 in 3. As a reminder, at the end of every show, 3 charts you should be aware of, and if not, consider this your fair warning to start looking at it as of right now. Our first chart is traditional Dow Theory. We talked about this a couple times so far in the show today. I think it's really telling because as the Dow Industrials has gone to higher closes, the Dow Transports have now appear to have put in a lower high, and this is based on the short-term peak we had last week on the holiday week. We've sold off again today, so overall you have a lower high in the Dow Transports, a higher high in the Dow Industrials. That sort of divergence is why you look at Dow Theory. It's looking at different parts of the economy and how they relate to one another. So if this is exaggerated, and at this point, what are you looking for? You're looking for a break to new closing lows. So it would not take much for the Dow Industrials to go back below the low from last week. Dow Transport's a little further down, this low here, but if we would see a breakdown, that would be maybe the next step in a rotation more to a negative pattern, confirming a bearish divergence of those two indexes. The second chart for the 3 in 3 is what I call the new Dow Theory. So the Dow Theory that I just showed you was created by Charles Dow, 100 plus years ago. Let's update this a little bit. And so what I like to do is look at the S&P 500 as a traditional, as a look at the broadest measure of the economy, technology, financials, the things that are really driving things now, consumer. And then at the bottom, we have the Nasdaq Composite, which is really focusing on the technology portion. So much of what we do is illustrated or illuminated with the Nasdaq Composite Index. So looking at how these two relate, I think is the next way we can gauge overall market strength in the form of broad indexes. In this case, you actually don't see any sort of divergence. Both the S&P and the Nasdaq Composite continuing to put in a pattern of higher closes, higher highs, higher lows until that pattern breaks, until the S&P would go below its previous low there. That'd be around 30.90, 30.95 or so. I'm guessing that would tell you we're starting to see a rotation. We have not seen it yet. So by this measure, no worries just yet. The third item I would look at is the technology sector, the XLK. Sold off today along with so many other things. On the XLK, a low above 86 would continue this pattern of higher highs and higher lows. But if you see the XLK get below 86, you start to see the relative strength turn lower. That might tell you that everyone's very bullish assumptions going into year end, that we're going to rally, Santa Claus rally, small caps rally, everything's happy in this seasonally strong period. If we start to see the XLK break below 86, we see the relative strength turn down. I think you have to question how rosy this next month or two is really going to be. So that's the third of the 3 in 3 to pay attention to. Folks, that is our show for today. Thank you so much for joining us on the Final Bar every weekday, 4 o'clock Eastern, 1 o'clock Pacific on StockCharts TV. I want to remind you to send in any of your questions, thefinalbar@stockcharts.com. We're going to have a mailbag segment in the next couple of days. We'd love to incorporate your questions and feedback. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Happy Cyber Monday. Take care.